Welcome. Here's a quick financing or mortgage option or affordability option for the condo that we have coming up in May 2015 in Falls Church, Virginia. As you can tell, there's a beautiful open floor plan. There's 2 bedrooms, 2 full baths, and everything updated, about $35,000 worth of upgrades that went into the property. So let's take a look at the costs that are involved. So here we have our calculator. I'm going to zoom in a little bit here. This is the calculator that we've developed for our clients, just to give you guys an idea of what it would cost with the HOA fees and the condo fees, or the PMI, MIP, what's in there, the property taxes, the homeowners, utilities, etc. We've gotten pretty good feedback from people about our marketing for this property, so I just wanted to put this video out there so that you can understand the costs that are associated for owning a condo. So the purchase price, we're just going to assume $314,900, and the down payment, I have 0% right now. Obviously, if you're doing a VA loan, that would be a 0%. If you're going to be doing a different type of loan with low down payment, such as 3% or 10%, whatever you're looking to do, you can actually just come in here and put that in. For the purposes of this one, I'm just going to put 0% for now, and then we'll do another one where we actually put a down payment. So here you're going to see that the total financed amount, now obviously if you were putting a down payment down, that would be a smaller amount. The interest rate, I just pulled the interest rate from today. So I just went to US Bank, and you can look at just the rates. And I'm going to scroll down, so I'm going to look at the 30-year for VA mortgages and just get an idea. So this one's 4.0008, so I'm just going to use 4.1%. So if you're doing an FHA mortgage, so you have the percentages here. If you're using an ARM or a conventional fixed rate mortgage, those are the numbers that are listed here. And if you're confused about what these mean, give us a call, or if you're looking for a lender as well, we can refer you to different lenders that we network with. So for the purposes of this demonstration, I'm just going to put 4.1%, and you can see that how the different interest rates actually impact your PMT, which is your monthly payment. The PMI or the MIP is private mortgage insurance or mortgage insurance premium estimate. Sometimes these could be as big as 1%, and it really depends on the type of mortgage that you're getting. So since we're doing the first one for a VA loan, we're not going to be putting a PMI or an MIP. There is no HOA for this property, but there is a condo fee, a monthly $436 that basically pays for all the common area maintenance, everything included in the condo docs. That includes the building maintenance, security, the parking areas, the gyms, the pool, of course the maintenance of all of the common areas as well. So that's $436, and then the property taxes for this property is $27.47. So if you divide it monthly, you can see the fees here. So right now your total monthly payment is $21.86. Now there is a homeowners or hazard insurance, and that's going to be dependent upon which homeowners insurance that you're going to be getting. So you can put in here an estimate of $50 if you just want to budget for that here. So the utilities is a big question. The homeowner spends $60 to $90 a month. Obviously, utilities is a concept of understanding how often you're going to be using the property. If you're traveling a lot, if you're not there a lot, or if you're going to be there constantly, or you're going to be working from home. So obviously that's going to differ. During the summer months, she did say that the monthly fees, she likes to keep it cool, so her electric bill goes up to about $150. So I just did an estimate here between all the months, and I'm just going to put $100 here. And then we always let people know, if you're going to be doing a home inspection or a condo inspection, or if you're interested in getting a home warranty, we would allocate, or just remember to allocate some money. If you're not going to be doing that, then you don't need to allocate for that. Now, the next 3 items are the VA loan. VA loans are for veterans. So if you're eligible, you need to have your paperwork in to make sure that you can qualify for a VA loan. And the first time that you use the VA loan, you get a lower percent lending fee. So as you can see here, it's 2.15 is what we've put in here. Please check with your lender. As I said, these are only estimates that we've put out here, and an outline for you. And the closing costs, actually, we for the estimated purposes, we put 3%. Obviously, that's on the higher end, but we just want to make sure that you're going to be able to allocate enough money and know all the costs that are going to be coming. Now, if this is not your first time getting the VA loan, or if you've used it before and this is your second or third or fourth time, then the VA loan lending fee goes up to 3.3%. Obviously, those rates may have changed, so please check with your lender again to make sure that you understand the cost with the different loan options that you're going to be getting. And like I said, if you're confused about it, your agent should be able to guide you through or refer you to a great lender who can really explain all this. So right now, with everything that you've put in here, you can kind of budget for yourself, and you can see that maybe it's $2,300. That would be a good estimate with everything else that you have allocated. And obviously, if you guys want to see the benefits, the tax benefits of spending a little bit more on your monthly versus rent, and then understanding how that impacts your tax benefits, please look at our video on a website called rentorbuy.info. That has a great breakdown, and our calculator here actually does that as well. We do a comparison. We can look at if the mortgage payment right now is $2236. Here's your mortgage. And if you were to compare rent, so let's look at what the rents are going for a property like this at the Skyline Square. Okay, so when we pull that up, we can see here what is active. So 2-bedroom, 2-bath is going for about $1,750, $1,795, so about $1,800 for rent. So we can go back and put it in our calculator. So I'm just going to put $1,800 and just assume that there is no increase in rent, which is usually not the case. There's usually a steady increase of rent payments. So when we compare the $2,236 and the $1,800, you can take a look at the estimated tax return benefits that you're going to be getting and what it actually costs you. So if you take out the benefits of the tax return from your mortgage payment, and again, this tax return is just an estimate because on this comparison, I don't know your tax bracket, and we've just estimated that. So if you look over here, the federal tax rate that we've put in here is 20%. So you can look at the tax rates. I have the 2014. Obviously your tax rates are going to be different if you're single and filing a loan, or if you're married. You can take a look at it. If your income falls within some of these areas, you'll be able to see. So 25% taxable income is about $37,000 all the way up to $90,000 plus, and then 28% is $90 to $186. So we can actually put 25% or 28% and see what that rate looks like. So if I come in here and actually put 25%, and then also there is a state tax of 5%, so you're going to get a little bit of benefits. And again, this entire calculator and how I'm processing this information is actually on the video on our rentorbuy.info website. So it really explains all of this as far as the first few years, or actually you're just paying interest first and then the principal next. So a big chunk of the deductions are going to come when you first own it. And if you're going to own this condo for 5-7 years, or if you're going to be holding on to it, then you can do more of comparisons. So let's go back and look. So the difference between renting and owning is right here. And then of course the equity that you're building by owning versus just paying rent. When you're paying rent, obviously you won't be able to deduct all of this. But when you look at this, you can deduct your interest. And then also, there are other things that we haven't really talked about, is the property taxes and also the appreciation. So your condo is actually going to appreciate as well. But we've kind of left everything straight line here, assuming that the mortgage payments are all the same and the rent is the same, and we're just going to do a comparison based on that, and that there's no appreciation. So this is assuming that there's no appreciation on the property whatsoever. So even if you own it for 5 years, you can take a look at how many months or how many years you'll be renting and the impact of that. So you can actually add up all the rent for the different months or the different years and how much money that you're spending out, and then what you can actually deduct as tax benefits and the deductions that you can take on your tax returns, and then the equity that you're building, and then calculate in the appreciation rates as well. So, and then of course we have an extra payments tab if you wanted to put in an extra $50 or $100 a month, how that impacts your payments. But so that gives you a pretty good idea. Actually, I forgot to add the utilities in there, so you can add utilities. But when you're renting, that rent doesn't usually include the utilities either. But you can go back and put that in there as well. As far as the lending fees, obviously if you're a VA or getting a VA loan, these are lending fees. And depending on who you're going with for your VA mortgage, you can ask them, if there are any additional benefits that you can get. If you have the opportunity to get the lending fee built into your mortgage, we've had some cases where that was allowed. And then also find out about your closing costs. Now here we estimated again a high percentage. We always let our people know just to estimate 3%. So those are the costs that you should be aware of when you're buying your first property. When you're also purchasing a property, you should definitely have a good representation, somebody that can really explain and break down things so that you know step by step what you're getting into. And also don't be afraid to ask questions and understand every little cost that is going to impact your lifestyle and also your monthly payments. So I hope this was beneficial. If you guys have any questions, please feel free to give us a call. Our team is always available, and we look forward to talking with you. Make it a great day.